Hi guys, welcome to Gold. Today this video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Thursday and from the United States, we are waiting for the following economic headers to be released: the core CPI month to month for September, and the core CPI year to year for September, and the initial jobless claims and the continuing jobless claims, and some other important economic headers. That's all for the economic calendar. We'll move on now to the numbers. On the last trading session of Wednesday, we have had a trading range from 1499 to 1511. Numbers are rounded and the market is still open. Gold spot is expected to print a close price above 1507. It's actually now trading about 1505. The numbers rounded and the market is still opened. Gold is trading in an uptrend above its all daily simple moving averages, except the 50 days daily simple moving average located about 1510, and the momentum is strengthening. And for the RSI readings, it's 69 weekly and 68 monthly and 51 daily. It's all moderate, and the supports are seen at 1505, followed by 1493, and then 1480. And for the resistance levels, it's 1512, followed by 1519, and then 1560. That's all for the numbers. We'll move on now to the trading strategy. The tension in Syria brought demand on both gold and silver as a safe haven demand. Add to that the less than forecast job opening, all over with the excitement about the proposed trade deal between US and China. And though gold dipped more than once in the last trading session of Wednesday, but it was a great opportunity, or turned out to be a great opportunity to buy. Looking forward, I'm staying away from the market for a few days until a conclusion about the trade deal comes out. I advise you as well to do the same. Personally, if you ask me about my personal judgment, I doubt a trade deal is achievable between US and China. And as a hint, please don't get teased to short either gold or silver, considering the rising tension in Syria and Hong Kong. The rotation power of gold is minimum $50 to $70. If something got serious, gold could advance in seconds about $50 to $70. Technically, gold is trading in a bullet trend above its all daily simple moving averages, except the 50 days daily simple moving average. And if you'll ask me, I'll tell you that the market is trying, and it's obvious that it's trying to push the gold back above its all daily simple moving averages and put it in the setup ready to rally. But we cannot bank on this yet until we have more signs of life around gold and silver. However, if we dip from this level, 1480 shall provide extreme support. Beneath there is 1450. It's a very strong area, and the 100 days SMA comes along, and the trend line, it's very well protected from the downside. And in my point of view, buying the dips remains the most profitable strategy to follow in this market. The bigger the dip, the better. And if you look at the big picture also, gold is in the explosive stage of its rally that started 19 years ago, since 2000. And in this stage, which has another few years to go, gold could be showing us something completely different than what we have seen in 2013 or in 2008 or in 2015-16. So based on all what I said so far, okay, we, or at least in my point of view, keep on the buying the dips strategy as your favorite strategy. If the market dips $5, buy, then add more, make an average, and you will have an opportunity to sell at a better price. That's all for today. Thank you guys for watching. I'll see you tomorrow in another video.